Trust, accountability, gratitude, I think will significantly help anyone's psychology. And this is three different variations that any human being has that we can all implement as often as we'd like to.
Welcome to the Build Us Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. And we believe that the key to scaling your wealth and compounding your life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. I'm your host today, Brett Swarts, and each and every episode, we are joined by some of the world's best entrepreneurs, millionaires, and billionaires, and they share their ideas, secrets, and wisdom with us so we can level up our life, faith, success, and impact. I'm excited about our next guest. He is out of Louisiana. He's got a unique background with real estate brokerage, being a coaching consultant, helping with people build funds with a group that he works with and coaches with. And overall, we're going to be talking about today about human psychology, but really it's investor and entrepreneur and investor psychology, and just understanding that and getting it maybe a little more nuanced than we typically do on the show. I want you to welcome to the show with me, Dustin Gomez. Dustin, how are we doing?
Hey, Brett, doing terrific.
Excellent. For our listeners to get to know you for the first time, can you give us just a little bit more about your story and your current focus?
Yeah, sure thing. So as you mentioned, from Louisiana, I have pretty much lived here almost my whole life. I primarily was out of college here at LSU, got a bachelor's degree, master's degree, later worked in corporate leadership for about 20 years. And so several different geographies, but Louisiana's home for me. We do have a second home in Florida, which we get out to pretty frequently, but this is home. This is where we want to be. For our businesses, we really have an integrated company where we do help organizations with their businesses, their investment products, their funds. We coach and consult in that sort of capacity, but we also set up our own funds. And that's really our focus today, where we raise private capital. We put that into real estate related projects for our partners and our clients. But then also outside of that sort of practice, we do help buyers and sellers through our brokerage. And we even manage assets as we do a buy and hold strategy, either for ourselves, our funds, or our clients. And so really our focus at the moment is growing our influence, growing our client base, and trying to help as many people as we possibly can.
Awesome, Justin. Yeah. Go ahead.
Yeah, I was just going to say, outside of that, I've got 4 really young kids at home. So I'm a family man at heart. So I try to balance everything we're doing with the businesses, but they keep me very humble, keep me very young. So that's what I'm up to, and anticipate doing that for quite some time.
That's awesome. And if you want to find and learn more about and connect with Dustin Gomez, just go to LinkedIn and search Dustin Gomez, and you'll find him on there. So a couple things that we're going to kind of tease out on this episode, besides doing entrepreneur and investor psychology, based upon your background. And I want our listeners to be thinking about this as we kind of dive in. And it's the connection and how to move capital from real estate, businesses, into passive funds, right? And private equity, in a very, very efficient way, right? And so I'm excited about that based upon your background. We're going to be talking about that later. But let's dive into to the topic, which is entrepreneur investor psychology. So, Dustin, what would you say is the number one secret when it comes to understanding as an entrepreneur or an investor, the kind of the human psychology side of things? And I guess it could be in making decisions or in making and executing business plans and setting up processes and procedures for teams. Like, what comes to mind when you think investor and entrepreneur psychology?
Sure thing. The first thing I would say is understand that it's very difficult to do anything at scale by yourself. So you typically are going to need a team, service providers, partners. There's all sort of relationships there. And so when you involve other people, I think the most important thing that some people often overlook is everything begins with trust. So you have to have trust in all of your relationships if it's ultimately going to succeed or work. But also, if you have trust with another human being, it's a lot easier to do business. It's a lot easier to get decisions made, get through projects, that sort of thing. And so in order to establish trust with other people, you've got to certainly be open-minded. You must have integrity in everything that you do. And if you really just take note of that as you're trying to not only deepen your current relationships, but create new relationships, it typically will work out in your favor and the people you associate with. I think if you don't have trust in any relationship, especially in business as you're trying to scale up, it from a psychological standpoint, it can not only harm you, but it's going to impact your bottom line ultimately. And so I think that's the number one thing that people should focus on as they're trying to expand their businesses, or as they're trying to deepen their influence on the world while we have the time here. That's certainly the most important thing that I found.
Okay, it makes sense. Everything begins with trust, understanding, being aware of that. Okay, so what's the top mistakes that maybe an investor or an entrepreneur makes to either break the trust unintentionally? Anything come to mind?
Yeah, certainly. One of the most often things I see with the students that I coach, or the no real estate investors that are really trying to break into the game and raise big capital, or find good projects, is they just immediately skip over the relationship side of capital raising or project implementation and go straight into pitching their asset class, their team, themselves. And, a lot of times it may or may not align with the person that you're speaking to. So Brett, for example, if I wanted to tell you about the different businesses I were up to, I wouldn't just immediately say, "Hey, Brett, I'm Dustin. Here's why I'm amazing. Here's why you should place capital with me or do this project with me." I would want to say, like, "Hey, Brett, what are you working on? Like, what's your business? What sort of goals do you have in your life? Is there anything you're trying to accomplish?" Try to understand the individuals that you're talking to before you just immediately start running into, "Here's my product, here's our returns, here's why you should work with me." So I've often found that not only will that make your business more successful, but you'll get a lot more joy out of it, knowing the root causes of who you're trying to impact, and what their desires might be in life.
Okay, so it sounds like the top mistake is, skipping over the rapport part, the relationship part, pitching too quickly, not even knowing how to align because you haven't spent the time to, get to know the person or figure out what their major, roadblock or objective they're trying to accomplish is. And then the mindset change is to add value first and get clear understanding. Is that a fair summary so far?
Absolutely. That sounds great.
Let's talk about a method on this. I've been studying and practicing from Chris Voss, Never Split the Difference, Art of Negotiation. And he talks about the method of mirroring and labeling, right? And so sometimes too many questions can be very kind of intense, right? Especially for, driving people who are high driving personalities. I know for me, I can be very direct, and it can move pretty fast. And so I had to learn to, slow down and, kind of lower the frequency. And one way that's helped me is using the method of mirroring and labeling, where you might start with the question like, "Hey, like, what's your biggest roadblock, or what's the biggest thing you're trying to achieve, or what are you passionate about?" And that opens up the conversation to start. But instead of asking more and more questions on that, you start to label the emotion and the passion behind what they're saying, and you start mirroring the overall, kind of the summary of what's going on. Can you talk about that, Dustin? And what's your experience with mirroring and labeling?
Sure thing. So, first of all, I've read the book. Great book, and certainly applicable to our conversation today. I think that one of the things that I often see is, if you're genuine about trying to understand and get to know a prospect or a capital source, that's really a good first step. I think the thing when you're having that conversation, mirroring and labeling is two really important factors, because that's what you're sort of thinking through internally. That's your mode of communication. But to the person you're associating with, it shows them that you're listening and you're trying to understand what it is that they're going through. You're not looking off to the next person you want to talk to. You're not distracted by notifications on your phone. Like, we all have those sort of things. But that's what you're ultimately conveying. And Brett, in my experience, it's hard for the average person to listen and understand. But again, sort of back to our previous talk, is it's one of the most important things you could do. I'll tell you, as an investor myself, whenever we're looking for sources to allocate, which we're in that mode right now, we're trying to see who's going to take the time to align with us and get to know our business. Because, ultimately, I think what we all should be after is not how many deals, how much capital we can take in, but how many sources can we really understand have a huge impact. Might be a smaller group, but there could be more capital, deals, clients, that sort of thing, if we really take the time to, as you mentioned, mirror and label. So I found those practices to work if they have genuine intent, and typically works good for you, typically works good for the person you're talking to.
Love it. By the way, people want to learn more about that book, Never Split the Difference by Chris Voss, Voss. Also, really even better than that is their masterclass app. It's called The Art of Negotiation, and you can watch Chris teach this and actually give live examples. I've probably watched it 50 times, Dustin, maybe 75 at this point. And I have it as an ongoing training. I actually trained where I watched 5, 10, 15 minutes, usually Monday through Friday when I'm working out during my workout. I'm getting just a little bit more because it's so powerful. So I encourage everyone to check that out. Okay, let's move on to question number 2 with the entrepreneur and investor psychology. The first one was trust, establishing it, right? Everything we just talked about. What would you say the number 2 secret is here to investors and entrepreneurs using psychology for more success?
Sure thing. So I think that probably the second most important thing there is accountability and how you can demonstrate that to your investor. So what you want to do, accountability is a very simple thing in nature, but it's much more difficult sometimes to execute. And so, for example, just the basis of our conversation, after I've established a good platform of trust with someone, maybe we get into how we can mutually benefit from a business conversation. I like to layer in how we're going to be accountable to whatever it is that we're agreeing to. And, some of the simplest ways you can do that is do the things that you say you're going to do to your investor, your client, your management company, your business partners, whoever it may be. And you want to demonstrate clearly the systems that you're going to utilize to implement that sort of accountability. And so one of the simplest things we do is we're just overly transparent with absolutely everything that we do. We try to make things as favorable as we possibly can for our investors, but we're trying to make the right decisions at all times for them. And part of outlining accountability is not only being transparent, but also owning up to things that are not going well. So we not only do that after the fact, but when we're capital raising, we try to show our investors all the possible ways that a fund or a product could go wrong. And we proactively identify what steps we would take and are taking if those things were to happen. And, Brett, in my experience, and I coach a lot of my students on this, is they only talk about the positives when they're raising capital or working through a project. They talk about the returns and how much money there is to be made and how outstanding their team is, but they rarely talk about where the opportunities, challenges, risk are. I like to proactively identify that. I like to tell investors or clients where I think we're weak today, if we're working on those, who are we recruiting, what sort of service providers might we engage if we get into this particular scenario. And so I think demonstrating that accountability through transparency, but also identifying how you're seeing the landscape and illustrating what your action steps would be, I just think that's incredibly important.
Okay, I think I got this. This is great, right? So it sounds like the mistake that people make is they're not transparent enough, and they also not setting up a system to demonstrate ongoing accountability. They find that they're aligned in, let's say in values and like the mission and kind of thing, but they're not saying how we're going to demonstrate that we're living up to that. And also, they're also just only seeing the positives, right? They're not doing what's called like a strengths, weaknesses, opportunities, threats. Like opportunities is great. Strengths is great. but also what are some of the weaknesses and what are some of the threats, and then communicating those. Is that and being transparent about it. Is that fair summary, Dustin?
That's very fair. Just giving whoever you're engaging with an accurate description of what you can foresee, what you know, even if it's not necessarily what they want to hear. They have the right to understand if they do business with you or create a relationship with you, what they can expect and what they're getting into. So these are just two really easy things that any one of us can implement. And I've seen it work firsthand, and I've seen it be really detrimental firsthand. So just two things I would point out for you.
Yeah, that the big mistakes, I think we've all made is we're not slowing down enough to, even when the person is ready to move forward, it's like, no. You may be ready to move forward, but let's make sure you really get this, and you're experiencing that, and you're understanding that, and of course follow up with an email or something where you can really capture that understanding and clarity, because sometimes things happen quickly, and then surprises are the worst, right? And the last thing you want to do is have anyone have surprises. Okay, so that makes sense. What would you say secret number 3 is to really being successful as an entrepreneur or an investor when it comes to psychology?
Sure thing. So I think really for me, the third thing is as a fundraiser, as an entrepreneur, as business owner, and Brett, as I mentioned, I kind of wear several hats myself and coach people there. I think really the third secret is gratitude. So I think that you've got to be grateful for the opportunities we're given. You have to really internally understand where they come from. And gratitude is a practice that I try to implement almost every day, but it's another tool that we all have that we could be utilizing. And it could be something as simple as appreciating the fact that you have clients, a business, a family, that sort of thing. I'll tell you the most common thing that helps me practice gratitude with our investors is, capital raising for me is actually a pretty emotional process. So I think about all the things that investor had to do to be able to place capital with myself and my team. And that's a pretty humbling experience for me. Even if it's someone who comes from significant wealth, I like to think of, what did their previous generations have to do to actually achieve this wealth? Even if it were 200 years ago, someone somewhere started from scratch. And when I'm bringing in new capital, I think about that. And that helps shape my position when I'm making decisions on what to do with our funds. It's just not simply what's going to make Dustin and his team the most money, what's the best project based on the relationships I've created. But a sense of gratitude when you're allocating capital, I think, is just incredibly important to do that. Along with that practice, I've actually got a photo board in my office of all of our investors that have placed capital with us. And I have this moment almost each time we're about to make a big allocation. And I look at the photos of our investors, of our families, and I like to bring in a sense of inner gratitude of not only the trust that they've given us with their capital, but again, to reflect on all the things they had to do to even get to this point. And me as the decision maker for their funds is not only a big responsibility, but that gratitude gives me a sense of peace, and that allows me to have clear focus, understand the landscape, look through all the various financial data that any one deal or opportunity may have. And it's actually a huge business advantage if you have gratitude in your practices. And so trust, accountability, gratitude, I think will significantly help anyone's psychology. And this is 3 different variations that any human being has that we could all implement as often as we'd like to.
This is so good. We're speaking with Dustin Gomez. Lots of wisdom, lots of value here, and lots of gratitude. I can tell that you are a grateful person, and that you're grateful for being able to help people steward their wealth, right? And also be a steward of their wealth when they entrust you with these types of due diligence and understanding of deals and private equity, and even brokerage to sell their property. I love what you said there. Think about and remember all the things a person had to do to get here, right? In other words, don't take for granted that it's, maybe if your first inclination is, oh, it seemed easy, or this is not a big deal. Like, no, it is a big deal. And even if the person who's coming to you is making like it's not a big deal, it's like, no, it is a big deal. And even if it was the person before them, the generation before them, it is a big deal. And so to have a stewardship mindset versus ownership, which is part of our core value here at the podcast, Built to Billions and Capital Gains Tax Solutions, is just we choose stewardship over ownership, right? We choose stewardship over ownership. And ownership, what it tends to do when we it can become very what's the word? It can move us towards entitlement. When we're like, oh, we own this thing, or either we have this really great product, or we won the client or won the investor or whatever, right? And we have it's like no, we're a steward, right? We're grateful for that, right? Which in stewardship tends to lead to gratitude. No, we're a steward. They've trusted us with this assignment to sell their property or to help them place the capital, and gratitude is what opens up the I think the spirit to not only fulfillment but also wisdom, right? Whereas if it's ownership and entitlement, it tends to lead us to I think less likely to have wise decisions. And so I also love the photos. That's a great idea. I have photos with my clients, but I haven't thought about putting it on like the vision board, right? That's great. You should, the vision board that you have for your personal, but you should also have maybe like a stewardship client photo, collage, right? Because that's the great point. And then you're like, okay, I'm about to make this decision, or look at this. How am I going to help to be a better steward with the capital? Is that a fair summary, Dustin, or anything else to add?
No, Brett, that was perfect. I'll just expand super quickly on, understanding what the person had to do, or where it may have come from. So like if I've got a particular investor, and I typically have several different investor profiles that we raise capital from. Some are middle class, some are high net worth, some are more institutional family office based. But if it's your middle class family who's relying on you to make their investment work, I'm thinking about all the night shifts they had to work at the hospital, all of the times they had to wake up early, all of the times they're taking time away from their family to, go out and earn this money every single day, and then make the right decisions, save, and then ultimately place their capital with me. That is a huge responsibility. And if you don't take the time to understand that, you might just see a good opportunity. You might allocate some capital without really appreciating how you got the capital in the first place. So I'm trying to think through the individual situation on how that might come into play with our funds. So good recap, but I try to break down every individual, every step of how they got there. Even if you're a family office, you had to start at some point being very successful, earning, saving, making good decisions, even if it's over the course of several generations, to get to where you are today. So I try to take a moment and be grateful for that sort of stuff.
This is awesome. Dustin Gomez, everybody, LinkedIn. You want to find him there, Dustin Gomez. Okay, so we promised in the beginning of the show to talk about an elegant way to really kind of goes along what we're just saying here, right? How do you help clients, how do you help investors steward their capital when they exit, especially when they want to go into private equity opportunities that, generally speaking, real estate funds are not going to be able to accept a large Bitcoin exit or a large, business exit. Sometimes you can do, some real estate stuff, depending if it's a 721 exchange, there's a little bit of that. Sometimes you could do like a carve out into a syndication, but those are also hard to kind of do. So I'm wondering, Dustin, what's been your biggest frustration when it comes to someone who says, hey, Dustin, I want to sell this, $10 million business. It's in California, New York, New Jersey. It's going to have 3 or 4 million of tax. I really want to go into your private equity, debt fund, or your private equity real estate opportunity, or even your syndication. And I got this massive capital gains taxes. What's been the either the method or the mindset that you've helped to solve that, or what's the biggest frustration there?
Yeah, sure thing. So, Brett, it is interesting because I got started really in the fund space about 2 years ago. And, one of the things that we've always tried to do is not only generate really good returns, really good cash flow consistently for our investors. But we are always keeping tax top of mind. And so a lot of our strategies to date really are sort of shaped by that. So we like to earn significant income so that we can pay out above average dividends. But Brett, as you well know, we're always looking for how do we implement our practices in a really tax efficient way. And one of the frustrations, like you put it, is in a traditional real estate model, and ours certainly is no exception here, is we use depreciation of all types to try to limit the tax burden as much as possible. And Brett, that typically works out okay for our high net worth individuals, some of our family offices. But the frustrating part, if there is one, is when you have a really large check writer who sees the value in what you're doing, and you feel a connection and like, you know what, I really want to help this person. I really think I could do well for them and their family, but they can't allocate to you because you don't offer the type of tax efficiency that they need in a particular situation. And so I have had a couple that I think were very significant check sizes that wanted to come in. We made the pitch, we made the presentation, and ultimately, once we got into due diligence, we really couldn't do business the way we wanted to, because we couldn't offer the type of tax efficiency they needed in that exact calendar year. And so I'm sure you see this in your business, Brett, but for us and our mindset, that is a little frustrating sometimes when you and your investor are entirely on the same page, but because of the laws and rules of our world, we can't make it work in that situation. And so that can be a little frustrating at times, where you say to your investor, listen, this is wonderful, but this might not be the best fit for you based on these particular tax laws or situations.
Yeah, I think that's spot on. And let's solve that problem for you once and for all, Dustin. Right? And
let's do it. Yeah, let's talk. Yeah.
So quick background for those who maybe listening to this for the first time: started at Marcus and Millichap, 2006, as a real estate multifamily broker agent at the time. Help people buy and sell. The market crashes. I see friends, family, and clients lose half or all their wealth. One of the main things we identified was a 1031 exchange was the worst thing that they could have done, because they were overpaying in 05 and 06 and even early 07 until everything stopped. Then they didn't have enough liquidity. They had too much debt. They overpaid, and then they lose it, right? Or have to dig themselves out for the next 3 or 4 years. 2009, we learned about a strategy that's an alternative to a 1031 exchange that works for business. It works for Bitcoin. We've done Bitcoin deals, stock, primary homes, of course, real estate. It can also save a failing 1031 exchange or any asset of any kind, multi-million-dollar exits, and you can defer all the tax. But the best part about it is once you defer the tax on the sale, have an extra 20 to 50%, you can go into whatever asset you want to at any time. So there's no debt replacement requirement. There's no lifetime replacement requirement. There's no timing restrictions. In other words, it's basically the Netflix to the Blockbuster 1031 exchange, okay? And so most entrepreneurs and business owners, they want to go into private equity deals. They want deals that are above average returns, right, than the stock market. They want the diversification of debt and equity, right, and mobile home park and industrial and multifamily, right, and also the stock market and maybe some Bitcoin, right? They want a mix of multiple things. They also maybe want to do it themselves, and maybe half of themselves and half of it with somebody else, right, where they can diversify. And so this strategy we perfected is called a deferred sales trust, not to be confused with a Delaware statutory trust. And it works for any asset of any kind. We just did a $16 million exit for a client out of Oregon, and they were selling a dental practice. And Oregon has 10% state, 20% federal, 3.8 Obamacare. It's like the extra 34% on 16 million. That's a pretty big number. We did another one, $8 million deal out of Massachusetts for an automotive sale. Deferred all the tax, about $2.5 million. Did a massive $44 million apartment complex out of Las Vegas. And they were GPs in this syndication. There's 2 GP owners and an LP that used it, and the rest of the LPs just pay the tax. So it's very flexible. Most people have never heard of it. They get it confused with the Delaware Statutory Trust. We can save 1031 exchanges, but what's really great about it for the person who's trying to add value, because I always say, Dustin, we don't get paid for bringing in a great deal to invest into or selling for a high price on a brokerage, but we get paid for solving problems, right? And adding value that makes an impact and unlocks freedom. And the way we found that one of the best ways is an extra 20 to 50% more proceeds working for you. And so we think it's the best kept secret. This is why we founded our company, Capital Gains Tax Solutions. And this is what we do every day. And we put tens of millions of dollars into private equity, mostly because most of that's what our clients like. But I'm curious, Dylan, from your background, A, have you heard of it before? B, have you experienced it at all? And C, what do you think when I say all that?
Sure thing. So, Brett, just in full transparency, again, I believe in that now. I had never heard of Deferred Sales Trust until we had really set up the schedule for this podcast, and obviously looked up to see what kind of business you guys were into. And I think it's fascinating because this is not only a huge challenge, but as you mentioned, I'm in the space. I've been doing this for quite some time, and I can just tell you in my circles, this is not a common thing that is discussed. And so it may be the best kept secret. I do this all day and have not come across it until I met Brett. So Brett, super grateful we were able to connect.
Absolutely. And then what would it mean if you could exit? Like when Bitcoin is about 105,000 a coin, I think maybe it dropped to 100 today.
Yeah.
But, someone, let's imagine, like we had a $5 million Bitcoin exit a couple of years ago. She bought it for $50K, went to $5 million in value, or went to $50 million in value. We exited at 5, deferred all the tax. She used it to start a business venture, diversify the wealth. But just thinking about that, right? Like think about if you could 1031 Bitcoin into private equity, right? All seamlessly, like the amount of capital that could pour into multifamily to help end the housing crisis, right? That could build mobile home parks, right? But also could diversify for them and get durable cash flow, could get tax flow, I call it depreciation, to offset some of that cash flow. The power of the movement of capital in a tax efficient way, especially with this 84 trillion, right, to 100 trillion in the next 15 years by the baby boomers. Now, most of that's primary homes, businesses, commercial real estate. But the power of that, I think we're on the verge of what I call the reverse Tea Party, where 250 plus years ago or so, America fought for the freedom from not enough, freedom with all the tax they were paying. And now it's been blessed with so much wealth. But there's this window where we have this urgency of like this wealth is transferring from these baby boomers to the millennials mostly. And if it doesn't properly go and it gets just, the government vortex of the 35 trillion, right? We haven't been good stewards, right? And we're not probably have a lot of freedoms. So any thoughts on any of like, man, how many people we could help if we could educate them on these amazing strategies like the Deferred Sales Trust?
Yeah, look, I think that it is extremely applicable to the current environment. There is, Brett, we've been able to raise quite a bit of money just in the last couple of months. But if you also look beyond that, there is significant optimism in the world today. And I think that, one of the things that you mentioned, if you just isolate the opportunity to a Bitcoin investor, one of the things that they're considering is, okay, I've held this, it's increased in value. Should I get out now or should I not? And, I've got some potential investors who want to do positions with us, but they're kind of like, okay, well, what about the tax? What about the gains? And that's something everyone's thinking about. And the reason we're trying to attack a lot of those investors now is it's January. So plenty enough time to make decisions on tax implications, investment decisions, that sort of thing. But I know firsthand several larger Bitcoin investors that are trying to exit and looking for, well, how do we exit and do business with you? So Brett, stay tuned. I may have some referrals I need you to help me with, because part of the question that myself as a real estate investor, I can't quite answer is, what is the best way to exit your position and come over and make a position with me? And it's a difficult question to answer when significant money is at stake. And so having a solution, for me, I can tell you firsthand, it's like a breath of fresh air to be able to finally have an answer for, well, how do you bring in the larger check writers who are trying to exit something else to do business with you? And, how do you construct that in a way that works for them. So lots of good opportunity there. I look forward to kind of diving a little deeper.
Yeah, happy to help. And if people want to learn more about how to exit Bitcoin, a business or investment in real estate, or even public or private stock, primary home, really any asset of any kind, at least has $1 million net proceeds, $1 million gain, you go to capitalgainstaxsolutions.com and get started. Download our free ebook that's going to break down what the deferred sales trust is, how it works, what the steps are. And if you qualify and apply for a no-cost consultation on our website with myself or one of my team members to dive into your unique fact pattern for your exit. Couple key things. We need to set it up before the close of escrow. Unless you're using our best 1031 exit plan, where we give you an option for a regular 1031 exchange or the deferred sales trust, but you got to get it set up prior to the close of escrow. So make sure you go to capitalgainstaxsolutions.com. We also have a best-selling book, if you like to read about it first, called Building a Capital Gains Tax Exit Plan. We have Kevin Harrington from Shark Tank in the book and other really smart folks that will share their story about businesses, entrepreneurship, investing, but our main focus on the book is building a capital gains tax exit plan using a deferred sales trust. Check that out on Amazon. All right, that being said, Mr. Dustin Gomez, we're running out of time. Are you ready for the lightning round?
Yeah, sure. Let's do it.
All right, knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
I would have become an entrepreneur sooner if I could go back in time.
Perfect. Question number 2, number one way you're using ChatGPT.
To help write emails and realtor remarks when I'm doing a new listing.
Perfect. Question number 3, number one leadership quote or theme that you strive to live by.
I would say number one leadership quote, Psalm 23 from the Bible, "The Lord is my shepherd."
Beautiful. Question number 4 is number one book in the past year.
Number one book, undeniably, is The Greatest Salesman in the World by Og Mandino.
Question number 5, I believe. What are you most curious about right now?
I am most curious about the upcoming year and how the world will embrace leadership change. I'm in Louisiana, which means I'm in America. We have a new president, a completely new mindset headed forward. I'm seeing how the world will embrace that and how that might shape the next few years as my kids are kind of coming into teenage years. That's very important to me.
Awesome. And the very last question, and it's the really the heart of why we're here at Build to Billions podcast, which is to be stewards versus owners, right? Practice stewardship mindset and practice every single day, and also to give more or all of it away, right? And so, how are you practicing stewardship? What's something that's helped you to practice be more of a steward versus an owner? And 2, what's something you're very passionate about giving away?
Yeah, sure thing. I think part of being a steward for me is through a lot of our coaching and consulting, we just try to help as many people as we possibly can. These are fund managers as well. So they're ultimately going to impact people's capital, people's lives. We try to do it like that. On a little bit of a personal note, I try to coach all of my son's sports teams. That is extremely humbling, but we're trying to shape young leaders and the next generation here. So we just try to help as many people as we possibly can. My wife is very involved with our church. We're kind of getting involved with a food pantry to try to help homeless people have meals on the weekends. And so we're doing all sorts of things like that. We just try to wake up each and every day and do as good for the earth as we possibly can.
Dustin Gomez, it's been more than a pleasure having you on the show. Man, I want to thank you for being on the show. I want to thank you for sharing your wisdom with us. I want to thank you for sharing your heart with us. I want to thank you for sharing how to be a better, think better as an entrepreneur and investor with our psychology, right? Building trust, with gratitude, with accountability, and also diving deep on the deferred sales trust with me. I appreciate that and your thoughts and on that. And I want to encourage you to keep using your gifts to help people be a better steward with their capital, make great investments, sell for the highest price and the best terms when they sell their real estate, and ultimately just making a bigger impact. For our listeners, if they want to get in touch with you, would you remind them one last time what's the best place for them to find you?
Sure thing. You guys can find me on LinkedIn. If you just search Dustin Gomez, I should come up. Or if you do want to schedule some time with us and get to know us, you can go to our website at thegomezgroup.com.
Amazing. Thank you, Dustin. And thank you all to all of our listeners. Listen to another episode of the Build is Millions podcast. We're also streaming on Capital Gains Tax Solutions YouTube channel and podcast. I want to encourage you all to take action today to practice the things we talked about today, as well practice some gratitude today and every single day. And of course, if you have a large exit that you are considering for yourself or for one of your clients, investors, make sure you go to capitalgainstaxsolutions.com to schedule a one-on-one consultation with myself, one of my team members. Get the book, get the ebook, or buy the book on Amazon, Building a Capital Gains Tax Exit Plan. Appreciate everyone out there. We will talk to everyone again real soon. Bye now.